Okay, this is the daily money-making setups for the S&P E-mini for June 1st, in case you want to go back and look at your charts and see where your setups were. We're using the 1500 tick bar chart, and we're going to be using ProcessTrading.com's right edge trading system. Now, normally I go over all the setups that were available in the trade because usually there's a considerable number of them, and you could look to see where you could take advantage of even small market fluctuations. But today I'm going to just concentrate on two trades using the right edge trading system. And also I want to mention a little bit about reading the indicators and price action. So before I get into the specific trades that we're going to talk about, let's talk a little bit about the indicators and a little bit about price action. Now, in trading parlance, they say that price follows momentum. And you know the momentum line in the ProcessTrading.com system is down here in the sentiment oscillator. And it is this tricolored line right here. This is the momentum line. So they say that price follows momentum. And sure enough, basically it does. We see price descended here and momentum descended, and momentum starts coming back up and price goes back up. So that seems to be fairly self-evident that price is following momentum. And it is as it should be, because the momentum is created by either the demand coming in or the supply coming in. So they say that price follows momentum, and they say that momentum follows volume. Now that's what I want to talk about, and that's what I want to show you a little bit about. So let's take a look at that. First, let me put a volume bar on here so we can see it. This is so that's the volume bar from TradeStation. That's the canned indicator that they give you. Now, momentum may follow volume, but if you can tell it from here, it's very difficult. This is fairly unuseful information as it stands right now. So I'm going to take this off. It doesn't help any that all their bars are color-coded the same. So let me take this off right now and put on a different one. Let me put on this one, which at least in this one, the volume bars are color-coded. But we're still working on that, saying that momentum follows volume. Well, here's the volume actually as we saw it, and it's color-coded for down bars have a red volume, and green bars have green volume bars. So that if we look at this, we have momentum. If it's following volume, it's coming down here, then it starts to come back up, and it comes back up here. So there is some reasonably accurate understanding that momentum does follow volume. In this case, it doesn't look like it's following volume so much, is that volume is preceding momentum. And actually, that's as it should be too. But I'm going to add one more thing here. So if they say that price follows momentum and momentum follows volume, then I'm going to add in volume follows energy, the internal energy. each of these bars has a specific impetus or energy behind it, behind that push to make that bar a high bar and this bar a low bar, etc. So we want to look at something that just you and I and normal people, normal traders can read with some useful information to us that helps in our decision making and trading. And we're going to do that by that addition of the comment that volume follows the energy put into that volume. So let me take this off right now. And this right here is the energy or the internal energy indicator in the processtrading.com right edge trading system. And it stands for internal energy. The internal energy here is represented by green being demand, red being supply, and then gray, whether it's in the supply side or the demand side, represents weakness. So now let's just read this energy indicator by itself for a second here. We saw the volume bars, which couldn't tell us much. But over here, we saw the price was uptrending. We know it's in an uptrend by the process trading VWAP being yellow, and just by the visual inspection of it that here we have price in an uptrend. And we see the demand for that here. So at this point, right here, we see weakness come in because that's a gray bar. Yes, the trend is up. Yes, there is demand, but now there's weakness coming in that demand. And if you look at that from here to over here, where the gray bar is, it's a fairly congested area. It's not vertically moving up like this. It's just a congested area. It did go from here to here, but those movements are made right here and then right here. From here to over here, this is just showing a weakness that it had. There's a small amount of demand coming in here, and it's represented by dojis up here, and then weakness comes back in. That weakness eventually comes in and is replaced by supply. So the supply is starting to take it out, and the way the internal energy oscillator works is it goes in peaks and valleys, whether those peaks are lower peaks or higher peaks, and then they head to the valleys. And actually, that's the way the trading sentiment works, where you have either sellers coming in and getting exhausted or buyers coming in and getting exhausted, and then the weakness or the opposite of supply and demand, whichever it would be, comes in. So we saw the weakness come in here, and here we see volume, and now we see the volume starting to diminish, and now we see volume starting to get weak over here. So you can see where the volume indicators are representative of what's happening to some degree. They really don't help in your decision making a lot. You can't read them out loud linearly as price is moving like you can when you're trying to determine the energy behind the movement. So I just wanted to point that out, that okay, price follows momentum, momentum follows volume, but volume follows energy. And this energy indicator, again, internal energy, is a proxy for volume. It's not a one-to-one where you see high spikes and low spikes, because this is representing the underlying energy in the movement. So that's what I wanted to point out about price movement and reading the indicator. So now we'll get into the two trades that I wanted to point out today. The first trade we're going to look at is right in here. Now, we know that in processtrading.com, if you have a yellow VWAP line, a process trading VWAP line is yellow, then you can take a long trade, a trade to the upside, anywhere there is a timing alert dot, such as this, below the price bars. And here's our first opportunity right here, below the price bar. Here's where the market opened. And here it is below the price bar. Now remember, the process trading VWAP line serves a multifunction. It is an element, a component of our trend trade. You have to have the specific color. You have to have a timing alert dot. In this case, the VWAP tells us the trend is up. And that's one aspect of it. The other aspects of it is that it's a support and resistance line. Okay, so here is price above it. It comes down to support right here. And it doesn't break through it. As a matter of fact, if you think of your classical technical analysis, you see that price had declined here. It formed a doji right here. And then the next candle engulfed the doji, and it was up to the long side. You don't need to use your technical analysis because process trading points it out and gives you the trade management technique for you. So that here we have the process VWAP line, again, serving as useful in the trend trade, support and resistance, but then it also serves as a regression to the mean line. Price regresses to the mean from the contrarian areas or the contrabands. That's this band up here, and you don't see the one on the bottom down here. So anytime there is a contrarian trade available to the downside or the upside, you will see a contrarian band, and we're going to talk about that in a moment. So here's our first trend trade, and I want to mention in this, because this is sometimes people will tell you that, oh, well, I'm not trying to take a whole trend, I'm just trying to get the heart of it. But they never tell you how to get the heart of that trend. Well, I'm going to show you right here how we get the heart of the trend. And it's by the technique, because the last thing you want to do is make a nice gain, a good profit, and such as this, and then turn around and lose it in this direction here. That's a trader's nightmare, and most systems will not give you the exact tools to take the heart of the trend without letting you come back and take the losses to the downside after you've made your gains to the upside. So let's get started here. The way that we have the yellow VWAP, we have a timing alert dot below the price bar. And so now the trade management technique tells us to look at the high of this bar and place our trade 2 points above that. So what is the high of this bar? The high of this bar is 27.23. So it's 23. So we're going to get in at 27.25. And right at the top of this bar, right here, matter of fact, I will put a horizontal line right there. Right. Yeah, it's close enough. Right there is where we get into the trade. And the reason that we have this trade management is because we want to buy into strength. where if price is going up, it's going to hit us there and continue on through. So our whole philosophy is to buy into strength and sell into weakness on our trend trades. So what we've done here is we saw the setup, we took the trade management, we placed our order got filled right here, we're in the trade, and now it goes up and up and up, and it hits the contraband line here. Now, you may know or intuit, well, I'm just going to get out there, and that'd be fantastic. And let's see what would happen. So you were in at 25, and this is up at the high of 33.50. Let's say you got out at 33, so you made 8 points. Great, but you don't have all these indicators on your screen, and let's say you didn't know that that was the contrarian point right there. Then you're thinking, oh, well, this is just going to keep going to the moon, because some days we know that it does that. But let's just say that you do have these indicators. Well, we know that these are discretionary indicators in the lower half of the screen. The other discretionary indicator that we have is this color-coded line right here, which is the stop-exit line. In other words, the way that works is when a bar in the opposite direction, so now you're going long, the bars are green, so when you have a bar of the opposite color going in the opposite direction and it touches this line or goes below this line, that's your stop point, that's your exit point. So let me just put in a horizontal line right there. Okay, and that's where, if you didn't exit somewhere in here, this is where, by the system, you would exit. So now let's see where this point is. This was at 25, this was at 31. So you've made 6 points right there. That's 6 points. Just visually look at it, and what that represents is the heart of that trend. That's how you take out the heart of the trend. You have to have a specific entry point to get you in when prices are rising in their strength, and you have to know when prices are getting weak and they're falling. Now, if you did not have this stop exit indicator, then you would be able to use the discretionary indicators as well to know when the price action is turning. Such as here we see demand. It came into an apex, and now it's starting to get a little tired because the bars are weakening, and here is weakness coming in right here. So you could have got out in the same area just by reading the discretionary indicators. But in the trend trading process, you don't have to do that. It's all laid out for you in the upper half of the screen. So that is how we took out the majority of that trend in a safe fashion. Now, again, as you get better at reading things, the system, as you get better at using the system and interpreting the system and have a feel for the system, you very well could have exited up here when this touched the line. So let me take these horizontal lines off now, and we'll talk about the next and the last trade. That is the contrarian trade right here. You can take a contrarian trade because price touched the contrarian line and actually went above it. That's one criteria. That's the first criteria for a contrarian or a counter trend trade. And this is clearly counter trend because the VWAP is yellow. The next thing is that you must have a timing alert dot. So we have the timing alert dot. Next in order is that the high of this bar, and because we're going to the downside, must be lower than the high of the previous bar. So what you do is you set your stop one half point, 2 ticks above the high of the previous bar. You get into this trade immediately as soon as you can when you get the dot, and you set your stop two ticks, a half a point above the previous bar. Now you can see that you took this trade down to this point, and right here is where a bar of the opposite color touched the stop exit line, or actually crossed it a little bit. Or closed on it or above it. Okay, which is why we wouldn't get out here. Even though that did go up, it closed below it. And then it continued red. But this closed on it or above it. So we're going to get out right here. So if we take our horizontal lines again, let's say you happen to get into the middle of the trade right there, and then by our trade management technique, you exited right there. Well, we can look over here and we can say if we got in right at that point there, that's like a 32.50, and we went down to 28.50. So that's another 4 points you picked up here. So just taking the heart out of the trend, you picked up 6 points here, and you picked up 4 points here. It's $10 on one contract. That's $500, and that's from what, 10:15 to 10:30, and you're done. Matter of fact, you could have been done for your trading day with either just this trade or just this trade. Clearly, there were other trades to take today, but I wanted to mention those two issues. Let me remove these horizontal lines here. Those two issues of price action, how you interpret volume, how to read the indicators, and why this is a better proxy for volume, and then how this gives you a trade management technique that not only gets you into it to buy strength, but gets you out of it when weakness comes. And the opposite is true in the other direction as well. So that's it for the chart today. And if I didn't mention, I can't remember if I didn't mention, this is a chart from June 1st. In case you want to check out your chart and see where your setups were and see what your indicators look like at these specific points, and if you would have picked out those trades. So I hope you have a great weekend and a good trading week next week. And if you want to get these updates with the setups on the Emini daily money making setups, then hit the subscribe button. And if you want to see how the whole system works, head on over to processtrading.com, where if you have any questions about anything, the setups or the system itself, over on processtrading.com, at the bottom of the page, there's a contact form where you just put in your email and your question or comment, and we'll get back to you. Oh, I forgot I'm remiss. I forgot to tell you. The other reason that you could take this contrarian trade is because within this yellow band, yellow is that a normal trend is in process. And green says that price is getting overextended. And then the blue tells us that it is overextended. So let me state that again, that the yellow is normal, the green is extended, and the blue is overextended. And so when we take that contrarian trade to the downside, we want to see blue in here at some point. It doesn't have to be this large. It could just be a very small blue point, but we do want to see some blue where it's extended. If not, if you don't have that blue, you can still take that trade, but you want to monitor it very closely. So at any rate, that's it. And again, hope you have a great weekend, good trading week next week, and I'll see you on the next video.